Welcome to day 48 of me backtesting my way to success. First trade was a loss, and the reasons why I entered were this 4-hour fair value gap right here, daily fair value gap. Well, I marked this daily fair value gap, and then inside of the daily fair value gap I looked for like an order block in the lower time frames, but I only found this 4-hour fair value gap. So I entered once it was inside of the 4-hour fair value gap, which was also above the 50% mark of the equilibrium. And on a break structure I entered in a lower time frame right here, stop loss above the previous high, take profits this area of liquidity, this one, and the one at the bottom, so swing low of the equilibrium. I got stopped out instantly. Price went up to react with the fair value gap, I guess. Yeah, with this 3-hour fair value gap or even 4-hour fair value gap. And for some reason, I honestly, like right here was the last point where I looked at, and I just didn't look at this fair value gap. I don't know how I did not see it. If I had seen it, I'd probably waited because we had a lot of buy pressure, and it made sense for price to go a bit higher into this fair value gap, which I can see now, and not go down instantly. So yeah, two take profits would have even been hit. Last one probably too. That's what it is. Should have paid more attention. Like, damn, how could I see the swing high but not the fair value gap? That's crazy. But yeah, let's just see how the next trade goes. Next trade was also a loss, and the reasons why I entered were this daily fair value gap right here, a equilibrium from the swing low to the swing high, and volume areas. A lot of volume areas actually right here. This whole consolidation made it in the 3 or 4 hour, but like that doesn't load right now anymore, so can change that. Right here also this consolidation. This consolidation was a take profit. This one I saw it because it was inside of the daily fair value gap and below the equilibrium. I saw it as a confluence to enter on. I entered right here of this breakup structure to the upside. Take profits. Okay, now that was the part that made me unsure, because take profit 1 was this volume area. Take profit 2 was this area of liquidity. And take profit 3 was this area of liquidity. And at first my stop loss was like this area. And as you can see, risk reward ratio of over 12. And I was like, no, something is weird. And so I placed my stop loss below this area of liquidity with breathing room. I have honestly no idea why I didn't place a take profit right here, but instead chose to place it right here. I mean, this is an obvious area of liquidity, but if I had like removed this volume area, could have seen like 2 bounces, and right here the third bounce would have probably been a good or a decent take profit. Yeah, I didn't do that. So yeah, that's that. And last take profit, I think it was actually hella greedy because I entered upon of a daily equilibrium, daily fair value gap, and there's still so much space, and there's this huge area of liquidity, as you can see right here, 3 bounces. Actually should have just placed my take profit 1 right here, 2 right here, 3 and 4 right there, but after second take profit was hit, should have moved my stop loss to the break-even point. Because yeah, that's just hella greedy, you know? Like this much is it's just way too much. I think it's way too big of a trade for me to take right now. And so yeah, let's just see how the next trade goes. Okay, so I actually did not take another trade. I noticed that I have enough footage to make a 5-minute video. And so that's already it for today's episode. We'll see you in the next one.